What up, guys? This is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So I got a lot to talk about in this video. I'm gonna kind of go through some steps of some things that happened this week. It was a roller coaster of a week, right? Before I get started, if you don't mind, please hit the like button, hit subscribe, and select all. And I want to go through a lot of different things that have been happening in the market. Where are we going from here? Is it going to get better? What we should be looking for, what we can be doing, how we can maximize gains, maybe some tactics, some theories, some thoughts, some different things like that. So, earlier in the week we had Jerome Powell. Everybody knows, so I'm not going to spend too much time on this, but the Fed meeting, a Fed announcement for the tapering to speed up the taper and possibly move forward the interest rate hikes into 2022. Everybody was worried about that. A lot of funds and institutions pulled money out of the markets. Meanwhile, getting ready to rotate. Meanwhile, getting ready for quadruple witching, which is a day where they are allowed to exit positions and re-enter positions. They tend to do that at the very last few minutes, even into the after hours on quadruple witching day, which happens 4 times a year. And it's the third Friday of 4 different months, and Friday today was one of those. That's why you see the volume and the volatility and the shifts a lot in the last few minutes. The reason why they do that is because they want to have as close to the closing price on the last day before they go into the next quarter. And they want to be lined up so that it's moving properly with the indexes and the fluctuations of the stock price from the entry date on quadruple witching. So that's why they do it towards the end. Now, it's been a wild ride. It has been it's been a roller coaster. Everybody's worried about the taper and raising interest rates. The reason that they're worried about that is because when you raise interest rates, certain things historically will always happen. There's other places to make money. Maybe you pull money from the market and you lend money at an interest rate now. Maybe you safe haven it into gold or bonds. Tech will usually get ruined. High multiple, these kind of things. But I will tell you, the thing with high multiple is, and I'm not going to get too deep into this, I have it in the courses, but if you're only basing everything on price to earnings, you shouldn't do that, because there's a big misconception with price to earnings. And I know you hear it in the news, and I know it is a big deal in a way, but let me just paint a little picture for you. So if you have a high price to earnings ratio, for many, many, many years, historically, the PE ratios have worked. And I think it's possible in the future that they will. But for about 25 years, they haven't played as much as they used to. A lot of people think, oh, I need to get the lowest PE. I'm getting the best value. Well, what people are overlooking is they're doing what's called sympathy buying and bargain basement hunting. Instead of grabbing the leaders, they're looking for low PE, and there's a reason that they're low PE. They've missed on earnings, they have a deceleration, they're not a leader, they're a laggard. So they have a low PE typically for a reason, okay? The vice versa with a high PE. If you have a high PE, it's also for a reason. Tesla has a high PE, Nvidia has a high PE, but they're leaders of their space, of their industry, of their sector. All the biggest gainers of the stock market ever had a very high PE. And if you only went off of low PE, then you're not getting the leader, you're not getting the biggest runs. And some of those have been like Qualcomm, AOL. There's been a bunch of them. Microsoft's one of them. Google was one of them. There's been a bunch that have had a high PE, and you wouldn't want to miss them. There's a reason that they have high PE, and that's because the demand. There's a big demand for it, because they're growing and they're accelerating on their earnings and their revenue and their guidance. So I just want to touch on that real quick. So what happens in the 4 market phases is, every there's a good example here. I just had it up a second ago. I just put it in one of these. Okay, it was ARK. Okay, ARK's a good example. Zoom is a good example. We'll go through a few. So in the 4 market phases, you have it comes down. Okay, that's what's happening over here as well. And then eventually the 200 will flatten out, and that's what happened here. And then once it gets above the 200, you get accumulation. That's the accumulation phase. Then you get the participation phase, and that's where retail comes in with institutions. And then you get the distribution phase where they sell off in chunks, and you start getting these big volatile dips. And you'll see on other ones, like Bitcoin's a good example. There's many of them that have these big spikes. That's a telltale sign. And then it'll go through the 4th market phase where it'll flirt with the 200, drag along the bottom, go under, and that's a short point when people, people will short it when the 200 and the 50 cross. It's called a death cross. And typically a good indication of a short is when it comes back up through the 50 like 3 or 4 times and then falls, and then you really know you got one. And then what you're looking for is you're looking for a floor. So as an example, ARK, it had a wonderful 2020, and I was in on all this blue ribbon that you see right here. I was in on this whole thing, and I got out right here up at the top. I think I lost about 10 or 11 grand of my profits, but I was up a lot, so I was still very, very profitable. Maybe I sold down in here, and yeah, that was 10, 11 grand just that little couple days. But I caught it, and I got out, and I had all the ARKs at the time. I was up well over 100% on this run, and I got it, and I got out, and I like Cathie Woods, and I like ARK, and I've been wanting to get back in, and there was a couple plays throughout the year that I did. In fact, I had ARK K recently on a swing, and I believe it was either in here or this last little one. It was pretty recent that I hit a little swing, and I didn't make a ton of money. I bought 100 shares, I think, and I made like $3 or $4, and then I got out just because it was under the 200, and yeah, I think it was down in here, and it was under the ribbons, and I just didn't want to put myself at too much risk. But I hit it, and I made a little money, and I like ARK, and I never had a wash sale on it, so I've been waiting. So you go through the market phases, and then eventually it'll find a floor. Okay, eventually it will. Now it could go down further, but it looks like it's made a floor. And what I'm getting at is not only do you have the 4 market phases that apply to all the stocks, but you also have stocks that work in cycles, okay? And you have to think of it like a pendulum, okay? Like think of it, this is a ball and it swings, woo, woo, like that, okay? So you have hopium, okay? We call that hopium, we call that euphoria, we call that FOMO. So, woo, swings to higher than it should be, okay? A higher multiple. And then it'll swing down, okay? And it's fear, and it's basically you have an axis. Imagine you have a line going down and a line going across, and the line going across is the mean, which is basically your 200. So you have the pendulum goes up to euphoria, FOMO, and hopium, and it comes way down to peak fear, and I give up kind of attitude, and it'll always kind of revert to the mean. Okay, that's the cycles of stocks in crypto. It just does that. It'll always do that. So, the goal is to accumulate down in here with the institutions, okay, and to verify that there's a floor before it starts turning so that you can accumulate and you can ride the whole thing back up, get out here, exit properly, wait through all of it, and then compound and do it again. That's kind of the goal, right? And you compound over decades and compound through the years. So as an example, this is 2020, okay? This is 2021, and possibly we're finding a floor, and then 2022 is going to go back. And you skip you go a whole year up, a whole year down, and possibly we have a whole year coming. Same thing for Zoom. Okay, Zoom's a good company. It's not going anywhere. It's a good company. It used to be really high, $590. I mean, that's a pretty high stock price. Yeah, and as soon as they didn't have the stay-at-homes, this thing started getting hit, and one thing after another, and everybody abandoned it except I think Cathie Woods and a few other people. But yeah, I mean, it got bounced off the 200, which was good, But it fell, and there's your short point, and people short it, and they put all that pressure on, and now you got red ribbons and a red cloud, and you're below support, and you try to come above it, and you still fail, and you try again, and here you go again, and finally it looks like you have multiple touches, and you have your first bullish candle. Your cloud is turning. Your indicator looks good here, 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 and here. So are we turning the corner? Did Zoom have a phenomenal 2020, a bad 21, and now rotating back to a good 2022? Only time will tell, but it's on my radar, and I actually picked up a little bit of it today, okay? Another one that you guys might be really happy to hear about is AMC. AMC had a lot of bearish signals. I mean, just from here to here was a lower high. Then we got in the microscopic, and we got a lower high. I mean, we had bearish signals, okay? We fell down to the red cloud. We had a red ribbon. We went sideways. We couldn't get out. We tried, and we fell. We fell through multiple supports, okay? Ladder stepping down, lower lows, lower highs. But you know what? The indicators just started to turn. They just started looking really good. And you got that famous doji I like. You got big momentum. In fact, it had a massive day, 19%. So it looks like it potentially, yeah, it's under the red ribbon. The cloud is still red, but you get one more good follow through day, and this thing might be like we talked about on ARC with that accumulation area over here. Might be down like this, and you get above there and you start buying. Let's go back to AMC so you can see. So AMC is coming down in the red. Okay, it's below the 200. It starts to pivot. It starts to come back up, it gets above the 200, and then it goes on a whole nother run, okay? Market cycles, stock cycles, okay? So back to Jerome Powell. Institutions and funds, they pulled a lot of money out because, well, let me ask you, was it because they were worried about a taper? Was it because they were worried about interest rates going up? Maybe. Do I think that's the main reason? No, I don't. I think the main reason why the market has been so tentative is not probably what you're thinking. I mean, some of you might be thinking this, but I mean, it's not what they're really saying on TV. At least I haven't been watching a lot of TV. Maybe they have, but the few things I've watched, I haven't seen them talking about this. I just see them talking about interest rates, taper tantrum, things like that. But really, what it comes down to is slower growth. When the economy has slower growth, that tends to signal potential recessions, okay? So I believe that is part of the reason why I think it's I think it's four things. I think it's the taper in rates, call that one. I think it's slowing economic growth, even though they say the economy is strong and can withstand anything. I think there's trust issues there. And I think that, people are smart in the financial industry, and they know that slowing growth can mean a recession, okay? So that's something to worry about. I think that there's rotations. I think that, when he spoke, there was a rally in the afternoon, which was odd to me that there was, because if they were pulling all their money out because they were worried about a taper and they were worried about interest rate hikes, and then he comes out and he says, we're doing a taper and we're doing interest rate hikes, and then they put it back in, to me, that seems odd. It should seem odd to you. In fact, the next day when everything was down seemed more normal on that news, if they were pulling out because of that. So you have, number one, you have the rates and you have the taper. Okay, two, you have slowing growth in the economy, potential signal to recession. Number three, yesterday they probably didn't want to do a lot of buying because they had to do a lot of buying on Quadruple Witching Day anyways, which is today. Okay, and I can't remember what the fourth one is right now. Oh, rotation on and that goes with Quadruple Witching. So they're not going to buy a lot on Thursday because they have to buy a lot on Friday. They have, they can keep their fund intact, or they can sell positions and then, use that capital to purchase new positions on Quadruple Witching. And like I said, they do it at the end of the day so that they're in line with the closing price on Quadruple Witching. I noticed that a lot of the stuff that they were buying at the end of the day was a lot of the stuff I've been telling you guys on this channel that they would be buying. Financials, healthcare, and infrastructure plays. So you know, I saw a lot of the healthcare stuff. Again, the rotation. Let's just look at ARCG again, which is one that I own because I don't know a lot about genomics and healthcare stuff, just to be honest. So it's easier for me to just have this one. And I've had it since, way, way, way back in the day, and I got out of it and just recently got back in. And so accumulation, huge run 2020, bad run 2021. Looks like it's about to pivot off a floor and start having a good 2022. On quadruple witching, they're going to switch based on what's going on in the global environment and the domestic environment, the political environment, basically what's going on. So infrastructure, I noticed a lot of them, like NUE, one I keep talking about on this channel, NUE, okay? They are a steel company. And, it's in the blue ribbon, it's above the 200. There's not a lot of charts like that. Everything is bullish, not quite the indicators right now, but they will be after the day it had because it went up 3.6%. It's a very good, solid company. And I noticed money rotating in there. DVAX, it's healthcare, 7.27. ARCG, 7.65, healthcare. Even look at Roku. I don't know if Roku hit the floor yet, but as you can see with the market cycles and the mountain, you have right here the same thing on every chart. It's on every chart. Just so you know, I'm trying to help you guys out so you can spot this stuff because this is where you want to buy. Like when you talk about buying the dip, if you have a high conviction in a stock, what you do is you wait for these red ribbons and you wait for all this downward pressure. You wait, it'll be under the 200 just like it was here. This right here looks big and this looks small, but 2 years from now, this little area is going to look like this on the chart. Okay, so this was a big deal back then, just like this feels like a big deal now. So what you want to do if you have a high conviction and you're buying the dip, then you want to do it technically. And the proper technical way to do it is right when it comes up above the 200 and it comes out of this base. And this is also on every chart right here. So there will be usually a base and it's right here. And it comes off of a pivot, it's called a swing high. It'll come off with swing high, it'll go through its thing, and then it'll break out with volume. See how the volume came out on that exact day? No, I didn't even plan that. That's just how it is on every chart. So the volume spiked on the day it broke the base and the 200. That's because that's how Wall Street is trained. That's how I'm trained as well. So that's the accumulation phase, okay? Now, if you have high conviction and you want to buy the dip, I'm going to tell you the proper way to do it, okay? Okay, you don't run it all the way up and then buy it here and buy it here and buy it here and average down. You don't do that because it's a falling knife. What you do is there's two really, really good technical ways to do this, and I'll keep it very easy. And this is tried and true and will make you a fortune, and you won't have to buy it and then lose money on it for a long time because you don't really know where the floor is. You always want to buy at the beginning of a bounce. So you want to understand support, EMAs, things like that. So let's say you now know that there's the swing high base and the 200 and you buy to accumulate and you want it for long term. Wonderful. You have a high conviction in it. Okay, so you run it, you stay in the ribbons, you either learn to get out on the cloud or you learn to get out on the ribbons or you stay in for long term. And what you do is you wait for it to test either the 50, sometimes it'll just stop on the 50 and then bounce. This one came all the way to the 200 and bounced. So that would be a really good technical area for you to purchase. Tesla did this. They all do this, by the way. Apple, all of them. I could go through a bunch of charts. This is the right way to do it. So you wait for it to come and confirm that it's back because that's where people go short. But if it bounces, like it tested 3 times and bounced, you add and you let it do its thing. And if you wanted more, it's a good time, but you just got to wait for it to start moving up. Okay? And then again, and this is getting a little dangerous. And now you either exit or you hold and you wait for the next cycle. Okay, I don't personally do it that way, but that is a really, really good. I do buy on the 200. I do that, but I exit way up here on my cloud. Like basically, it's 9 EMA. So once something is super bullish, I have this purple line up here, and when it crosses the purple line, I get out, and that's just. And then I can basically just wait for it to get bullish again, get in, get out, get in, get out, get in, get out, get in, get out. And it just keeps me safe, from going through all this nightmare, and then I can kind of compound my money doing that. But yeah, it looks like a lot of stuff that was really good in 2020 and then bad in 21 will be good in 2022. So a lot of stuff that was good in 2021, what's going to happen to it? Well, I don't really know exactly, but I'm not here to say that the Apples and Googles are going to do bad in 2022. I mean, look, in 2022, it's not going to be memes and speculative and SPAC as the predominant like focal point. I don't think so. I think what it's going to be is companies that have good services, companies that have good earnings, companies that have good contracts, companies that have good products. It's going to be, and some of those can be in the NASDAQ and tech and Russell. Some of those can be in there. You better believe it. It's just going through a little rough time because of the pendulum, the overreaction to the downside, the overreaction to the upside, okay? It's normal. It's the market cycle. So I noticed a lot of rotation going into exactly what I was talking about for multiple videos going months back or a month back or whatever. You got healthcare stuff coming back. Some energy looks like it's coming back. Financials definitely, and the infrastructure stuff. Those are your common sense plays. And then you're going to want to cherry pick leaders from the other sectors. They might not be the same leaders that they were in 2021. New leaders usually emerge. And that's another thing. Every time that there's a broad market sell-off or a correction, try to look at it as even though it's tough, try to always know in the back of your head, that's when not only do you get the best deals if you can establish the floor, because the floors will happen, you get new bases out of there. And bases are areas where charts develop and there's breakouts and you have new opportunities and things like that. So, just like this one that I'm looking at, Roku. Man, it's gotten hurt. It's gotten bad. I picked it up. I'm in it. And, it looks like it's about to really make some bullish moves. It's already really strong on the lower time frames. Okay, so that gets me to a little bit more on, the market reaction. And that's what I'm trying to explain to you, fears of slowing growth, taper tantrum, interest rate hikes, rotation, quadruple witching. So, will we get a Santa rally? I don't know. This is the way that I look at things. I'm hopeful. I want that. I want that bad. Just like everybody. But you gotta watch your macros. Okay, you have to pay attention to the indexes. Okay, the indexes tell the story of what is about to happen and what is to come. So when I look at the NASDAQ. I see quite a few bearish signals on the NASDAQ still. I don't see recovery. I think, was it up today? No, it was down a tiny bit, but it wasn't down like the Dow. I see a couple positive things too. I see 3 positive things, and I see nine negative things and 3 positive things. Okay, the NASDAQ's just, the story is telling me it's not all rosy quite yet. Okay, the Dow, let's look at the Dow. The Dow is showing me indecision. The Dow was showing a lot of strength, but now it's retesting this previous support, which is natural, by the way, from a technical perspective. You'll break out and come out and you'll retest, and usually that's quite healthy. So, but I'm seeing a lot of indecision currently, so we have to kind of see what happens on Monday. But I think based on my experience in the stock market, that the Dow is going to be there's going to be a lot of money put in the Dow, and should be as well as the SPY. SPY is wicked all the way down to is it down today? Yeah, 48. I see indecision in the SPY, and it's not good that it wicked to the 50, but choppy, right? Up and down, kind of moving sideways now. Big sell volume, way above the 200 though. A lot of indecision down here. It's hard. Here's the thing: we're all of us, you and me, are waiting for the market to find a direction. Okay, is the direction up? Is the direction down? Is these sectors up and these sectors down. We're just waiting for that to happen. And there's been so much shuffle and so much fear and so much change and so much volatile momentum and erratic behavior and driven by news fear cycles and all these different things that we just don't know the exact direction. And that's telling me that in the chart as well. The Russell was up today, but the Russell is the most bearish out of all of them. That doesn't mean it can't turn around. It just really has had a really tough time this year. Again, this was propped up with stimulus. Look, there's that thing I was showing you. It's on every chart, like I said. There it is, the big drop. And here's the little one that I showed you. See the little one right there? See how it lined right up to that peak? Okay, so what happens is it drops down and then it comes up and it gets above the 200, okay? And it didn't cross. Therefore, it had another base, and this is when it crossed and people started to accumulate, okay? Because this, once you get above this and this, that's when it's a known rule for that you're in an uptrend and it's safe to accumulate. It goes through participation. This is stimulus. This is propped up. This is manufactured. This is all the fun stuff that we were hitting in 2020. Been in this channel. It's been range bound. It's going sideways. It had a breakout, failed hard. Okay. It needs to turn, or if it falls through here, which is 2106, basically 2107, somewhere in there. If it falls through there, like, that's bad. It could be like the fourth cycle. I'm not saying it will. I don't know. You have the red ribbon, you have the red cloud, and you have the 200, and you have a failed breakout, and you're very, very bearish on like pretty much all levels. You get 2 points here. You get a 3. You got 3 out of 12. I mean, that's a very low percentage. You know, that's quite bearish. So we'll just have to wait and see on that one. Now, let's take a look. Yeah. So I wanted to talk to you guys about a theory of mine, and you know, I'm not positive. I could be wrong. I could be right though. The Great Shakeout. So this year, a lot of things happened that were abnormal. We had meme investing. We had a pandemic. We had stimulus, printed checks sent to you. A lot of people got in the stock market. Crypto rallied. You had the AMC situation, the GameStop, you have the Citadel, you have lawsuits. People lost hundreds of millions of dollars on both sides. On both sides. A lot of crazy stuff has happened this year. And, you know, coming from a chart perspective, as well as just someone that's been in the markets for a while, you usually don't have a big drop like we did in the November and then a little rally and another big drop like that, right? You know, back to back. And I was mentioning that in videos that it was a little odd. So I have to wonder if you have the combination of the taper tantrum and the rate hike and quadruple witching and the rotation, right? You have all these different things, but then you also have the Great Shakeout. It's the end of the year. You got tax loss harvesting, and hey, let's nail these guys to the cross. Let's beat them down till they panic sell, till they get out of the market, and we can control it completely again like we used to. Happy days, and let's get them all out. No more meme investing, no more lawsuits, no more bringing what we do to the spotlight and the media. And let's shake them out, and let's shake them out hard as we can. So when they think it's over, we'll hit them again and 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 again until they're gone. They're meaning you. So is it a great shakeout? It could definitely be a great shakeout. Or we could be going bearish. I don't think we're going bearish. I think I'm seeing a lot of floors and a lot of bottoms on a lot of charts. And I'm one of those people. I look for that. I know what euphoria looks like. I know what a floor looks like, and I know where to accumulate and where to distribute. And I'm starting to see a lot of floors develop on a lot of charts in not only stocks, but in crypto as well. And which also leads me to believe that there is the Wizard of Oz, right? The wizard behind the curtain. There's manipulation. There's whales. That's why I think possibly it was a liquidity shakeout in a lot of ways, with the good excuse of a taper tantrum and tax loss harvesting and some other things like that. I don't know for sure, but I'm one of those people that can kind of read between the lines on a lot of things and kind of sniff it out, and it's kind of what I'm seeing. The story is being told to me on the charts of all this different stuff. So yeah, it's very possible. But one of the things that you got to do when you're trading or investing is you have to understand that the market will never care about what you want. It will never care about your opinion. So all that you can control is your entries, your exits, and your capital protection and your position sizing, and finding the right stocks, and then waiting for those cycles and those phases so you can accumulate it at the right spot technically, and you can distribute it with them technically, and you can compound that, and you can have a system for that. And speaking of systems, I'm going to be teaching you a compound system for free in my Discord. The Discord link is below. It's in the description. Jump in there. We're all talking. We got the crypto chat, the Jedi chat, the Wheelhouse Club, the Jedi Club. We got everything in there. Everybody's talking every day. It's fun, real cool. I'll teach you for free. I'm going to teach you a way to compound your money on crypto and stocks for 2022. It's up and down, so longs and shorts. You will need a margin account for this. And I'll show you specific ways to get in, specific ways to get out, with a bunch of safety and rules built into the process. If you guys want to be part of my trade alerts and the Wheelhouse Wednesdays, then you can upgrade to Palawan, which is $49 a month. You get all my trade alerts, and I'm in there doing my new stop, raise stop, this, I'm buying this, selling that, like that's all in there. And then you get the group trainings every Wednesday night, which is super fun. One of the best decisions. Everybody loves that Wheelhouse Wednesday, me included. And then if you want to upgrade and you want to learn all the courses, like all weekend long, I'm going to be making more courses, but I have a ton of courses. I'm not kidding. Like, this is like serious business, these courses. Like, you will learn so much. Everybody's really stoked. Everybody has learned a ton and is very excited. I hear it every day on the one-on-one coaching calls. So if you do want to subscribe to be a Jedi, it's $99 a month. You get full access to all the areas of the Discord. You'll see everything. You'll have one-on-one coaching with me. You get 10 hours of that. You get the trade alerts, of course, and you get all the courses, and you get the Wheelhouse Wednesdays. So it's very inexpensive, and it's got so much value. And I teach you how to get out of the top and how to get in early. And I teach you how to navigate the markets and maximize your gains and do things the correct way. Whether it's investing, dollar cost averaging, swing trading, day trading, advanced crypto day trading, scalping, whatever it is, I understand it and I can teach you, So, the Great Shakeout to the Santa Rally, two extremes, I don't know. I'm still positive that we'll have Santa Rally, to be honest. I'm still positive that Bitcoin's going to go up, to be honest, even though it's bearish on the charts. Another thing, I don't want to talk too much about it, but you got the Omicron fears out there, and you got, publications coming out saying there's a lot of cases developing in the U.S. I saw one today. There's quite a few cases, quite a lot actually, in New York. It's in a lot of countries. There's a lot of information on that. So there's that going on, and there's just a lot going on, news related, but yeah, let's take a look at Bitcoin if you don't mind. Let's just see what I see. I keep hiding stuff in this one so I got stuff in here I own and stuff that other people own and stuff I'm helping people with. Bitcoin, right? Okay. So Bitcoin on the daily, this is what I'll tell you right now. Okay, on my 12-point system, which is a probability system that I designed, you get 12 points. And right now you have 0 out of 12 telling you to go long, which means you have 12 out of 12 telling you to go short. Here's how you handle crypto. There's two ways to do it. One, you dollar cost average. You just pick the same amount of money on the same day of the week or month, whatever, and you just, doesn't matter what the price is, you just keep adding like it's a savings account. That's a great way to do it. Dollar cost averaging is great. The other way is to do it technically and wait for confirmations and things like that. And this thing does not say go long yet. And what I see here is that it's kind of slowly falling. And because it got rejected, let's go look at a smaller time frame to see. Yeah, see, it came above, it tried, and it failed on this line. And the 200, double rejection. And then it fell down. Well, where's it going to go to, Chris? Well, from a technical perspective, it's going to come down to here, 43,945.82. And from there, if it bounces, that's where you buy, technically, and you put your stop loss down here. If it doesn't bounce and it comes down here and breaks through, well, then technically, it would be coming to about 39,660. So basically right under 40,000. So call it 39,500 to 40,000. If we get below there, let's say we don't bounce here and we fall through, and we come here and we don't bounce here and we fall through. Well, now you're definitely in an official bear market. Just keeping it real with you. You've come back past the low pivot, the pivot low point. It's not good. Yeah, it would be bad. So, this is what we need. Bitcoin and all of crypto really needs some strength. Like, this is really just odd candles. This is like, I don't know. It's almost like, it's like lackluster. It's like, it almost feels like maybe trying to push it up, don't really care, trying to push it down, but not too hard, trying to keep it up, just, I don't know, trying to keep it here. I don't know. It's very strange looking to me. It's not typical. You don't see this kind of junky candle charting on a lot of charts. There's also a lot of things on this chart you don't see on many other charts. Like the fact that this went red and blue right away, that's super odd. There's just a lot of anomalies on the Bitcoin chart. But this is strange. But in all, it's fighting, and it's not fighting hard enough, and it's coming down. It's coming down under this. Therefore, it's most likely going to come to this 43,944 area. Okay, so it's down for the week, and Ethereum's probably following it. Ethereum just got red on the ribbons, and it's red in the cloud, and I'm seeing 4 out of 12. A little bit better. 4 out of 12. Hold on. I might have missed something on Bitcoin. Hold on. Oh, no. 0 out of 12. 0 out of 12. Okay. So 0 out of 12 says to go long on Bitcoin right now on my probability system. And 4 out of 12 say you could go long on Ethereum. But I wouldn't recommend it. I wouldn't recommend going long on Ethereum until either you got a daily close above this line right here of 3881.05 and then put your stop below it. But you got to be careful with these liquidation wicks, man. They're coming for you. So, you might want to get in there and maybe even a follow-through day. Or you let it fall and bounce off of this one and then put your stop down here. So I don't think right now in the middle of the indecision alley is the right place to buy. You kind of want it to kind of come down to like a support and then let it bounce and grab there. That would be smarter. And as far as the stop loss, it's very tough right now using stop losses the normal ways on crypto because these market makers are just these huge liquidity wicks that you see. I mean, these big wicks are to take you out. Why do they want to take you out? There's only one reason that they make wicks like this. There's only one reason they want to take you out, because Bitcoin is the scarcest asset in the world and they want your Bitcoin. So if they can know that you have a stop loss and they can stop you out, well, then it goes back to the exchange and then they can come in and swoop it up and accumulate more of it, which is less for you and more for them. Okay. So let's keep an eye on that kind of stuff. And I would suggest your stop loss be lower than you normally would put it. And also maybe join the Discord. And when I show you how to compound Bitcoin and compound cryptos, I'm going to show you a way where you can do it, where you got to be in front of the computer, but you don't need to have the stop at a normal stop point, because the way the trend and momentum system works, the way you enter it's giving you enough push and momentum that the probability is in the high 90 percentiles that it's going to keep going up or down depending on which way you're running it. And you could really put your stop low, and it's usually not a normal stop liquidation point as well. So just click the Discord. It's free. I'm going to teach you guys this coming Wednesday. I'm going to do it once for everybody for free. I'm going to show them the system. And then all the Jedis and Padawans, I'm already teaching them, and they're loving it. They're just like, everybody's digging it. I'm also going to have a simulator where we're going to have everybody in the group. I'm going to do it with real money, but you can, and I'll enter it in paper money, but I'm going to have a simulator so people can practice the compound system at the beginning of 2022 if they're nervous or whatever, and they can, do that with the paper trading account and do the system. And I think that's pretty cool. So, let's take a look at some really good stocks. There's a lot of them. There's a lot. I've been messing around with a bunch of stuff. I told you about Nucor Energy, FedEx. Maybe ArcGIA is turning. Roku might have turned. I mean, this is, I don't have all the confirmations yet to put you in yet. There's a lot of bearishness still, but there is always going to be a floor. And when you have a double bottom on support and you're starting to print blue candles and your cloud is going blue and all your indicators are showing it's going to turn, well, hey, this could be it, right? FedEx, great earnings call. There we go. Breakout and above the 200. Time to buy FedEx. I mean, CrowdStrike. I mean, the price is low. It seems to, it hasn't had its double touch, but it's and it's got a lot of bearish signals. But I mean, look, if you're new to the market, buying under the 200 is never advised. I tend to poach stuff, when I get my confirmations under, because at some point the floor will happen, and it'll always typically happen on the fourth cycle of the stock phase, and it will be under the 200. And it's going to be safer to enter above it, but I'm always looking for a validation where I can get in really early. Tesla's got some issues. It's showing that it could be coming down to me in the charts. Crown Castle, I had mentioned, I really think Crown Castle is a winner for you guys on infrastructure play. Look, you're above the 200. Beautiful blue ribbons, blue cheese on the ribeye, strong cloud, breakouts, trend reversal. You got everything going for you. Huge volume. I mean, you can't miss. You're 12 out of 12. Crown Castle is a winner. Disney, I grabbed it down in here, but it's been stutter stepping a little bit, and we'll just see where it goes. I already had it in my long term. I wanted to pick it up, and I was glad that I picked it up down here. My other prices were at like 117, I think, or 121. So I paid a little bit more than I did, but I've been wanting it, and it's been way higher. So the fact that it came down, I was like, I'll just grab a little bit more. So I like Facebook. I'm in Facebook. Facebook has the cloud. It's above the 200 now. It's working on its breakout, and I noticed that in quadruple witching, there were some big buys in the last couple minutes from institutions on Facebook. So just keep that in mind. I saw that in the charts. It's about to go blue on the ribbon. Microsoft, it's always a good company. However, a lot of bearish signals in the chart all of a sudden. So I'm actually seeing quite a few signs that Microsoft could actually come down a bit. Here's one that I do think is really good for a portfolio is Quest Diagnostics. Healthcare above the 200, blue ribbons, multiple breakouts, strong cloud hitting its highs, beautiful, beautiful indicators, volume going in the direction of price action. I mean, that's really like a 13 out of 13. Really good. I mentioned it many times. Another infrastructure play I like is called Builder. I got this from the leaderboard, top 50 stocks, and it's an infrastructure play. I'm watching it. I don't own it. I'm just watching it. Apple, to me, Apple's always something to keep an eye on. However, Apple is showing me that it is going to be coming down. SO. I picked it up today. It's a utility. It's a defensive play. A lot of people have been moving to defensive plays like utilities because people are always going to need their lights on. Just kind of common sense stuff. But a lot of bullishness on this. Above the 200, blue ribbon, strong cloud, great indicators, great volume. I picked it up. I got 300 shares. I think I bought, and it was right around in the 66 area, somewhere in there. So. Yeah, I've never owned it before. I'm glad to have it. It's a defensive play. They're super boring. It's like owning like Hormel or like Church and Dwight or Arm and Hammer. I don't even know. It's called Southern Company, but it's got the right chart. It's in the right defensive sector, and put it in there, and it's kind of like an anchor. It'll kind of just like keep everything kind of at bay. Visa, really like Visa. Visa still under the 200. Red ribbons are trying to turn blue. You're in the cloud. Had a couple rough days, but indicator's still good, saying it's going up. I don't know what it is. I love this one for you guys. It's called LPX, Louisiana Pacific Corporation. Everything is bullish. This is a big infrastructure play. Forest products, lumber, construction. Coinbase and HUT I have in here for whatever reason. This is another infrastructure one, Caterpillar, coming right above the 200, right about to go blue. It's an infrastructure play. Pfizer, Johnson & Johnson, Walmart, Goldman Sachs. Goldman Sachs had a rough day, but that's why I was saying, oh no, I didn't publish that video. Sorry, I made a video and I never published it. I was waiting for this. And the reason I was hesitant to buy is because I was wondering if it was gonna come and touch again. So it might actually make its way down, and then once it bounces, that's where I'll buy, which will be down by 370, 371, 372, 373, somewhere in that range. That's where I really want it. But I didn't think it was going to come down because of this big candle. But lo and behold, today it did. So we'll see if that repeats and bounces, and if so, I'm going to scoop up more of those shares. I am seeing bullish signals in the chart, by the way. It's not 100%, but it's good. So I mean, those are a few. Let's go look through a few other. I just have stuff stuck everywhere and named everything. This one's been doing good in the charts, but it looked like it had a horrible day. So let's not talk about that. What's this one? This one. I don't like that volume for you guys. What about Mickey D's? Mickey D's had a big volume drop today too. A lot of these ones that went on big runs might not be like, the 2022 story, I love that Crown Castle for you guys. I think Roku's turning. NUE is a good one for your portfolio. Financials, good. FedEx, good. Let's go look at Google. Let's see what's going on with Google. Google's showing bearish signs, huh? So we'll wait and see what happens with Google. Home Depot showing bearish signs now. So showing bearish signs, actually. NEO, tough. And, today on NEO is really tough because I own NEO, and you could see that's gone up a little in after hours. You could see that NEO was teasing us all day with this whole, like, moving up, and then got above its like breakout spot and failed, and it's going to make a reattempt on Monday, it looks like. So we'll see what happens there. What else? Let's look at Tesla. I still think that well, let me see. Yeah, I still think that Tesla excuse me. Tesla has indecision going on, more on the bearish side, but there are some things that I see that are conflicting in like the middle time frames, but on the longer time frames. And let's go look at the lower time frames. Where do we end off? Coming down. Middle time frames coming down, a little bit further, coming down, bearish, better. Better on the 4 hour. So that's basically feeling it from like maybe this morning or yesterday's action on Thursday or early Friday morning. So yeah, we're, the lower time frames, if they're all showing bearish, it could be cancerous and start heading its way up into the higher time frames, which are already bearish. So careful with Tesla right now, just for now. Wow, a firm is down this far, huh? All right, so a firm is showing a firm has every single thing written on it that says go short, everything. I mean, this is like a short play for sure. However, the one thing is that the two wicks touched right here, which indicates the floor at 91.78. So we really need to see another day. But everything else, so out of the 12-point system, you qualify for 0 out of 12 to go long. That's bad. That's the worst you can get. The worst you can get is 0 out of 12. So, but it's also a 12 out of 12, the highest, which is a 98% chance that you could go short and make money. So very high probability to go short, very low probability to go long. However, right around the 200, above got pushed up today on this wick, which was bullish, to the previous pivot low. That's also bullish technically. And it's created a double wick pivot low for a floor, which I consider as bullish as well. So those don't qualify in the 12-point system, but they are very good technical indicators. And we really need a little bit more data to see if we have a directional change. But thus far, it looks like it would keep coming down. Technically. So what else? This ARKG, God, the price is so low. I mean, this used to be $115. It was 100% lower or higher. I mean, it's 100% lower now. That's pretty crazy. AMC looks like it's now AMC is speculative, and I'm not recommending that you go crazy on AMC coming into the market, but I gotta say, AMC looks like it is going to turn the corner right now from a technical perspective. Zoom as well. Palantir, one of my favorites. Looks like it's established a bottom. And I see that we have 8 out of 12. 8 out of 12. It's not perfect. It's not rosy, but we're getting there. We're getting somewhere. And look at these small wicks, okay? These is like your little soldiers, right? So when you get 3 of them like that on a little floor, it tends to mean, like we're going to get a directional move. So it's really important that when we get the directional move, we get past $20.19. It's about $1 ahead of where it is. That's going to be a minor trend reversal, and it's going to really create bullish momentum, and traders and big money will really notice that number right there, 2019. A lot of people are probably waiting for that right there. So yeah, let's just cut it there. Yeah, I think I went over everything. Let's just cut it there. Look, please like the video, subscribe to the channel, hit the select all so that you get the notifications. In the Discord, just click that Discord link and come in to the Wheelhouse Trading. Verify, you can get in there for free. And I'm going to announce, and tag everybody in there right before we start the training, which will be December 22nd on Wednesday. You're not going to want to miss that. I'm going to teach you something really cool. And hope to see you in there and meet you. And again, my name is Chris. Thank you so much for watching, and welcome to the Wheelhouse.